Welcome to this week's weekly technical analysis for September 16th to 20th. My name is Joel Chandran here with Train to Invest. And today we're going to take a look at the Toronto Stock Exchange, the Focus 5 stocks, gold, silver, and oil, and a few related ETFs. So let's get started for the week. Here we have the 3-year weekly chart for the Toronto Stock Exchange. As you can see, we tried breaking through 13,000, couldn't do it, but we did end the week higher than we opened. So we closed higher than we opened, which is a good sign, and you can see the MACD down here indicating some growth. The bars are relatively the same, but the signal line is still lower than the MACD line, and that's what we want to see. The momentum of the stock or the index itself is still fairly flat, so that's due to the large momentum going up and down throughout the week, and obviously on Wednesday we had some big news. So 3-year weekly chart, we did test resistance, couldn't break through, came back down, but on the positive side we didn't break lower than we opened. So some volatility in the market over the last couple of days. We'll see if this extends through to next week. I would expect a bit of a slower week for the coming week, but again, we'll see how it rolls out. Here is the 6-month daily chart. As you can see, Wednesday was a big day for the index due to the Fed saying they're not going to taper anything. Thursday, we breached to pretty much a 52-week high, and then Friday, we closed at support. So there's a bit of profit taking, a bit of a sell-off on Friday, and that's why you can see the momentum indicators are red and quite steeply red because the drop throughout the day was quite significant. MACD is still above the signal line, but it's pretty much flat, so hence the blue circle. I would expect us to bounce up from 12.8 next week as long as the news tends to stay the same. Syria situation is calming down a bit, at least in terms of perception. Tapering is not going to happen this month, potentially next month, so that's tapered down a bit. So all of these pressures that have built up to push the index higher, as you can see from August towards the middle of the month here, have eased. And so there's less issues, quote unquote, going on. So that would obviously play into the volatility in the market, reducing it somewhat. We may see a bit of a pullback, but again, I'm not 100% sure. Indicators are saying everything's flat, and it's not really giving us any clear signal of what's going to happen next. This is the index versus its indices. As you know, if you've been following through, the black line here indicates the Toronto Stock Exchange. Lines above, outperforming, lines below, underperforming. As you can see, we have consumer discretionary, consumer staples, financials, the energy sector, all on the plus side. Gold is down, mining is down, and materials are down. So if you're looking to make money, you want to look at indices that are outperforming the market. So your best bet would be consumer discretionary and consumer staples. All four have been outperforming the market for quite a while and will continue to outperform the market in the next several weeks. Looking at oil prices themselves, with the situation, at least geopolitically, in Syria pulling away, we see oil falling below $105 per barrel. Not a great sign in terms of immediate growth for energy companies. However, it's still much higher than 6 months ago. We have seen almost a 12% growth over the last 6 months by a $10.79 increase in the price of oil. Obviously, that's going to help. I would expect oil to stay around the $105 mark for now until we have some news that will push it either up or down. Looking at Enbridge, 3-year weekly chart, it closed higher than it opened, so that's a great sign, especially with the amount of growth that happened throughout the week. We tested support and moved higher, which is great. Momentum definitely with the stock here, but on the longer-term trend charts, you want to look at the MACD and the MACD histogram. What's important to note is that we see the signal line starting, or the MACD line starting to turn. Histogram bars are starting to shrink. And the last time that happened here, we went from 42.50 to 47.50. Now, I'm not saying it's going to happen again, exactly a $5 jump. We know that with the MACD starting to turn, strength is going to move back into the stock itself, and we will see a bit of a run-up. So now might be a good time to start monitoring Enbridge before it takes its run. Looking at the 6-month daily chart, you can see Friday we closed lower than we opened, unfortunately, so not necessarily a great sign for momentum, but we had 1, 2, 3, ever since Wednesday, strengthening of the stock. Again, we closed above the 43 support line. Great news. We tested 44, couldn't break through. We may break through throughout next week. MACD and the MACD histogram both showing signs of growth. Excellent sign here. RSI can't really tell us much right now. It's fairly flat, but I would expect that to turn around next week. And the stochastic, while more sensitive to movements in momentum, is above the lower line. It's heading down. So technically it's a green, but again, momentum is pulling away because we closed lower than we opened on Friday. Otherwise, the overall trend is still higher closes, which is good to see. Higher lows here on Wednesday, Thursday, and Friday, beginning of an uptrend. Hopefully that will continue and push through 44, even towards 45. And once you break through 45, we're definitely hitting the 46, 47 mark if momentum is there. So remember, we saw the movements over the last couple of weeks. Hopefully this is the same thing that will happen again. But again, we need to see some strength here in Enbridge. It's just nice to see after this definite run down. Imperial Oil, 6-month or 3-year daily chart, weekly chart, excuse me. We closed just under the resistance point here. We tried breaking through 45, couldn't do it, pulled back down. So it wasn't a ton of movement here for IMO, as you can see by the size of the open, high, low, close bar. MACD and the MACD histogram, both positive, both growing. Good sign. We want to see this gap continue to widen and the MACD to head higher, because that would mean it makes it easier for us to make some capital. RSI and stochastic aren't showing us a ton about momentum. It is sideways right now, so we can't really read those too in depth. But again, MACD is still positive, and that's what we want to see on the 3-year weekly chart. Moving to the 6-month daily chart, you can see after Wednesday, it was sideways movement throughout the rest of the week. We did close lower than we opened, below the $45 mark. Again, momentum pulling away from the index or the stock itself, the opposite of Enbridge. MACD and the MACD histograms are flat, and that's definitely due to the lack of movement around the $45 mark. With oil continuing to fall, we will see, especially IMO and Suncor, taking a stronger hit compared to Enbridge. So factor in the falling oil for a bit, and once oil starts to rebound, so too will IMO and Suncor. 3-year weekly chart for Suncor. We tried to break through 37.50, couldn't quite do it. We had that 52-week high last week, but this week just couldn't contain that momentum and maintain that momentum, and that's obviously due to the situation in Syria starting to have a quote-unquote resolution, whereas before with the uncertainty, the supply issues would have helped continue to push Suncor higher. But again, we've seen since pretty much the beginning of July, a strong run-up from $30 to $37.50. So a $7.50 run-up. Great profit-taking there. Hopefully you've taken some. I would expect next week to be a little weaker as oil continues to stay flat. MACD, the MACD histogram, again, still positive, still wide. Nothing to worry there. RSI and stochastic obviously are red because we hit that wall and just couldn't break through. So momentum is starting to pull away. Looking at the 6-month daily chart, you can see here Monday, Tuesday, Wednesday, Thursday, Friday, not a whole lot of movement in terms of price. Everything is short, the same kind of dollar-ish range. So obviously not the greatest signs, but we may be hitting a plateau, and we may be just staging now before we break higher. MACD and the MACD histogram did have a cross, so a little bit worrisome in terms of where this is going to go. It may just come back down to 36, but if oil prices continue to fall, we'll see a break through 36 and head back towards 34. Momentum is clearly moving away from the stock, so now is not the best time to buy. I would wait until things start to turn around on the indicators before jumping on in. Looking to Royal Bank, we did close higher than we opened for the week, a positive sign compared to last week. We closed lower. Not a ton of movement overall. Net, it's positive. That's great. MACD and the MACD histogram, both positive, and at least they're maintaining the same growth rate, so the bars are the same. Momentum, again, sideways. We do have an inflection point, however, here on the stochastic, and that's interesting to see because it's an inflection point to the high side. So once it crosses over, we'll see the growth begin to turn higher. That's good news for Royal Bank. This could be the beginning of, again, trying to break through this 67.50 mark and establish new highs. But I would expect next week to be, again, this kind of sideways movement. Looking at the 6-month daily chart, you can see here Monday, Tuesday, Wednesday, Thursday, Friday. Tuesday to Friday, very much the exact same price ranges. Even though we did close lower than we opened on the Friday, it's still higher than Monday's open. Looking at the MACD and the MACD histogram, again, flat, as you can obviously tell, due to the 4 days of pretty much non-movement. And stochastics heading down. That's due to the drop on the Friday. Obviously, it's more sensitive to the movement on the last day than it is the RSI. So overall, I would not be too worried. $66 is a great place to get in. Looking at this chart, you can definitely make almost $1, definitely 1%. Looking at the charts itself, Royal Bank might be a little bit of a stage 1 here as we plan through, but we've already seen the major run-up from July all the way up to the beginning of a couple of weeks ago. Toronto-Dominion, 3-year weekly chart, closed higher than we opened, so definitely a positive sign here. MACD and the MACD histogram, both growing. Unfortunately, we see the declining bars here, but they're all three are on or above the 0 line. So that's a positive indicator for what's going on for the stock itself. RSI heading higher, which is good. MACD, or sorry, stochastic, I could have put a green, but I was being conservative and put the blue. We do have a slight, ever so slight crossover, which is a positive sign that momentum is with the stock itself. So it's good to see that we have both the MACD and the RSI showing green. Good for Toronto-Dominion. There's room for it to maneuver and grow even higher. 6-month daily chart, you can see Monday, Tuesday, Wednesday was, Monday, Tuesday was growth. Wednesday, Thursday, Friday, fairly flat. And that's indicated by the MACD here. A bit of a cross under, but again, we're still in between this 90 and 92 range. RSI, which is RSI and stochastic, are more predictive of what's going on in the shorter term. RSI is flat, and stochastic is red simply because of the decline on the Friday. We closed lower than we opened, so there's momentum pulling away. There's a bit of a sell-off on the TSX, as we noted before. So nothing to worry about. Still, if you're looking to get an entry point in, now might be a little too high because there's not enough room to make some real profit before the resistance point. So those looking at the Focus 5 stocks, we jump now to gold. And on Friday here, you can see a steep sell-off that broke through 1350. Not what we wanted to see on the index itself. I would expect it to come closer towards the 1300 before turning around. And again, that's due to the lack of warmongering going on in the world right now. If the situation in Syria was looking towards a more violent conclusion, gold will be going higher. So again, you see all the geopolitical events on the macro level having an impact on our indices, stocks, and commodities. Gold has fallen by 16.7% over the last 6 months, so $267. But it's, again, we've appreciated quite a bit since the beginning of July. Looking at CGL, Wednesday we saw a definite increase as the Fed said we're not going to taper this month. But then with the declining price of gold and oil, we saw a bit of a sell-off. MACD hasn't crossed the plus side, and I don't think it will if gold continues its trajectory. RSI and stochastic are both showing to stay away from this ETF. And until you see gold prices start to appreciate again, the Bull Plus ETF and this ETF are going to stay negative. Here we have HGU, the Gold Bull Plus ETF. Again, Wednesday was a great day for the ETF. Thursday, Friday, not so much, especially closing lower than we opened. MACD and the MACD histogram, still negative, still not looking positive in terms of getting in. RSI and stochastic, same as CGL, both negative, both steeply negative, saying stay away. If it gets back down to around the $8 mark, it'd be a good time to jump in if you're looking at this ETF, because as you can see, there is some history here. And then obviously, it's a good entry point. Not exactly at 8, but see how the ETF moves before jumping in. Now, the beneficiary of the falling gold prices will be HGD, the Gold Bear Plus ETF. As you can see, Wednesday was a bad day for the ETF. Thursday, Friday, we saw this flip around. Almost $2.50 gain on Thursday and Friday itself. MACD and histogram, loving the depreciation in gold prices. RSI and stochastic, both loving the 2-day appreciation, which almost brings us back up to the $20 mark. So with the steep appreciation, it's definitely due to the gold prices falling. I would expect next week to see weaker gold prices and to see both CGL and HGU suffer while HGD makes a bit of a run here. Looking at silver prices again, we still see that mimic in falling commodity prices. And it did break through $22. Again, not what we wanted to see. Over the last 6 months, silver has lost $7 or almost 25%. So that's a ton of percentage lost compared to gold. But we do see the same parallels as we go through. This is SVR, the Silver Bull ETF. Sorry, HZU. Silver Bull ETF, again, boom, boom, boom. All negative, all saying stay away because of the depreciation in silver pricing. The Bear Plus ETF, HZD, again, just like HGD, everything's green. We see Thursday, Friday taking advantage of the falling prices. So obviously, again, the same thing applies to silver as it does to gold. So that is it for us this week. If you have any questions, concerns, comments, please email me at joelchandran@traintoinvest.com. Check out our website. We just started a brand new set of classes, but it's not too late to get in. If you would like to get in, please email me, and we'll send you the requisite information. So that's it for us this week. Have a great trading weekend. Prepare yourself and get ready for the next week. We'll talk to you soon. Bye now.
The organizer has